Imagine waking up one morning and realizing the dollars, pounds, or Australian and Canadian dollars in your bank account don't buy as much influence in the world as they used to. For decades, the US dollar has been the king of global money. It's the currency of trade, the backbone of central bank reserves, and the lifeline of international finance. But now, there's a challenger rising fast, China's Digital Yuan. And the big question is, could this new kind of money actually threaten the dollar's dominance and reshape how the global economy works? Now, if you're watching this from the US, the UK, Canada, or Australia, you might think, why should I care about what China does with its currency? Well, here's the truth. If the dollar loses its grip as the world's reserve currency, the ripple effects won't just be felt in Beijing or Shanghai. They'll be felt in New York, London, Sydney, and Toronto too. It could affect the cost of borrowing, the price of groceries, your retirement portfolio, and even your country's ability to project power on the world stage. That's how big this story is. So what exactly is the Digital Yuan? At its core, it's a central bank digital currency, or CBDC for short, issued by the People's Bank of China. Unlike Bitcoin or Ethereum, which are decentralized, the Digital Yuan is fully controlled by the Chinese government. Think of it as cash, but in digital form, with every transaction traceable by the central bank. This isn't just about making payments easier or replacing credit cards. It's about giving China a tool to reshape the global financial system in its favor. China has already been testing the Digital Yuan in dozens of cities, from Shenzhen to Beijing, with millions of people using it for everyday purchases like groceries, transportation, and even paying bills. It's integrated into popular apps like WeChat and Alipay, which means adoption is frictionless. Imagine if the Federal Reserve launched a digital dollar tomorrow and it was automatically available in Apple Pay and PayPal. That's how seamless this rollout has been in China. And here's the kicker. China isn't stopping at its borders. It wants the Digital Yuan to be used in international trade, especially with countries that are already doing business in Chinese goods and services. Now let's zoom out. For decades, the US dollar has been the default choice for global trade. Oil is priced in dollars. International loans are denominated in dollars. Central banks from Europe to Africa stockpile dollars as reserves. This dominance gives the US enormous power. It allows Washington to run large deficits without facing a currency crisis. It gives the Federal Reserve influence over global liquidity. And perhaps most importantly, it gives the US government the ability to enforce sanctions by cutting off access to dollar-based payment systems like SWIFT. The dollar isn't just money. It's a geopolitical weapon. China doesn't like that. From Beijing's perspective, being dependent on the dollar exposes them to risks, especially in times of conflict or political tension. We've already seen how the US has used its control of the dollar system to sanction Russia, Iran, and even Chinese companies. By pushing the Digital Yuan, China is creating an alternative system, one where it doesn't have to worry about US oversight. That's why this story isn't just about technology or payments. It's about power, sovereignty, and the future balance of the global economy. Now let's get practical. How could the Digital Yuan actually threaten the dollar? It comes down to adoption. If China can convince its trading partners to accept the Digital Yuan for oil, gas, rare earth minerals, or manufactured goods, then over time, fewer transactions will be settled in dollars. Imagine a world where Saudi Arabia sells oil to China in Digital Yuan, or where African countries use it to pay for infrastructure projects built by Chinese companies. That chips away at the dollar's monopoly, one trade deal at a time. And since China is already the biggest trading partner for dozens of countries, this isn't just speculation. It's a realistic scenario. But here's where it gets tricky. Trust. The reason the dollar dominates isn't just because the US is a big economy. It's because people trust the US financial system. They trust that US Treasury bonds will be honored. They trust that the Federal Reserve, despite all its flaws, operates with some level of transparency. And they trust that the rule of law in the US protects property rights. Can the same be said about China? That's the big question. Many investors worry that the Chinese government could manipulate the Digital Yuan, freeze accounts, or use it as a tool for surveillance. And they're right to be concerned. In China, privacy takes a back seat to state control. This trust gap is why most experts believe the dollar isn't going to be replaced overnight. In fact, even if the Digital Yuan grows, it might only become part of a more multipolar system, where multiple currencies share the stage. Dollars, euros, yuan, maybe even a digital rupee or digital pound. But here's the catch. Even a partial erosion of dollar dominance could have huge consequences for countries like the US, the UK, Canada, and Australia. Think about it. If fewer countries need dollars for trade, demand for dollars goes down. That could weaken the dollar's value relative to other currencies. For Americans, that means imports become more expensive. For Brits, Canadians, and Australians, whose currencies are already tied in complex ways to the US dollar system, it could mean more volatility in exchange rates and more pressure on central banks to stabilize markets. And let's not forget, a weaker dollar could also mean higher borrowing costs for the US government. Right now, America enjoys the exorbitant privilege of being able to borrow cheaply because the world craves its debt. If that changes, it could force painful adjustments in government spending, taxation, and even defense budgets. So what should you, as an individual viewer in these countries, take away from all this? First, understand that money is not just paper or digital numbers in your bank account. It's a system of trust, rules, and power. When that system shifts, it changes everything, from the cost of your mortgage to the returns in your retirement account. Second, diversification is key. If the financial world does become more multipolar, with multiple strong currencies, it might be smart to think about investments that don't rely solely on the dollar. That could mean exposure to international assets, commodities like gold, or even cryptocurrencies. Not financial advice, of course, but something worth thinking about. Another angle to consider is technology. The US, UK, Canada, and Australia are all exploring their own versions of central bank digital currencies. The Federal Reserve is studying a digital dollar. The Bank of England has been researching a digital pound. Australia has tested pilot programs. Canada has been analyzing how a digital loonie could work. Why? Because they don't want to be left behind. If China sets the standards for digital money and others are forced to adopt them, it could tilt the financial system in Beijing's favor for decades to come. Western countries know this, and that's why they're rushing to keep pace. Now let's talk about surveillance and control, because this is where the digital yuan sparks the most concern. Every transaction with the digital yuan can be tracked. In China, that means the government could theoretically see where you spend your money, who you interact with, and what your financial habits are. Critics argue this could be used for social control, rewarding behavior the state likes and punishing what it doesn't. Compare that to the relative anonymity of cash or even decentralized cryptocurrencies. For people in free democracies like the US, UK, Canada, and Australia, this is a nightmare scenario. It's one reason why adoption outside China might be slower, at least among individuals. But for governments and businesses that trade with China, the appeal of faster, cheaper, cross-border payments could outweigh the privacy risks. Here's the bigger picture. We're entering a new era where money is no longer just about coins and banknotes or even debit cards and online banking. It's becoming programmable, trackable, and geopolitical. The digital yuan is the first serious attempt by a major power to challenge the old order. Whether it succeeds or not will depend on adoption, trust, and geopolitics. But one thing is certain: the world of money is changing, and the dollar's unchallenged reign is no longer guaranteed. So let's circle back to the big question. Is China's digital yuan the end of the US dollar? Probably not, at least not in the near future. The dollar is too entrenched, too trusted, and too dominant to be dethroned overnight. But is the digital yuan a serious warning sign that the world is moving toward a multipolar currency system? Absolutely. And if you're in the US, UK, Canada, or Australia, you can't afford to ignore this shift, because even if the dollar remains king, it may have to share the throne. And in geopolitics, even sharing the throne means giving up some of the privileges you've enjoyed for decades. So the next time you hear about digital currency or see a headline about the yuan, don't brush it off as something far away in China. This is about the future of money itself. And whether you're saving for retirement in Toronto, paying a mortgage in Sydney, investing in stocks in London, or buying groceries in New York, the choices being made today about digital money could directly shape your financial tomorrow.